It's another business week, and this is Business Morning. Thank you for joining us. I'm Chimeze Obi Iwago. Oil prices extended losses this morning as an emergency rate cut by the U.S. Federal Reserve failed to soothe global financial markets, panicked by the rapid spread of the coronavirus, while a price war race rages on between two producers. Brent crude fell $1.13 to $32.72 a barrel, tumbling after last week's plunge of 25%, the largest weekly fall since 2008. The front month price opened at a high of $35.84 but slipped to a low of $31.63. This is despite U.S. President Donald Trump's pledge to fill strategic oil reserves in the world's largest oil consumer to the top. The U.S. Fed slashed interest rates on Sunday in its second emergency cut this month and said it would expand its balance sheet by at least $700 billion in coming weeks in a bid to ease tension in financial markets. Oil prices have come under intense pressure on both demand and supply sides. Worries about the pandemic slashing oil buying persist, while oversupply fears have grown after top exporter Saudi Arabia ramped up output and slashed prices to increase sales to consumers in Asia and Europe. Earlier this month, the Organization of the Petroleum Countries and Russia failed to extend a production cut agreement, which has been supporting prices since 2016. Well, it was a gloomy week for the domestic equities market last week as coronavirus fears and lower oil price panic selling drove the market to its worst weekly loss on record. The all-share index declined by 13.6% in the week as investors sold off across board. Well, Temple will drill down the fundamentals with Adedayo Bakarede of AfriInvest. Temple, good morning.
Good morning, Chimeza. Thanks a great deal for joining us here at the Stock Exchange. Yes, it was true that we actually lost some 13.5% week on week last week, and of course that's due to reactional fears that we've seen in the market. Folks that are selling down, a lot of the foreign portfolio investors became risk off for the greater part of last week. They sold down on equities, they sold down on NT bills. They gave so much of a cold shoulder to the open market operations side of things, the secondary side of such market. And of course, the bond side of the market, they began to go more speculative on the short end of the curve. And of course, sold off on the 2049 security. We'll get to know all of this as we move on the show. But basically, we lost a whopping 1.8 trillion naira in equity capitalization last week only. That's what the equity capitalization actually shed last week only to 11.84 trillion naira as the market opened this morning. That's the number that we see right here on the board of the Nigerian Stock Exchange. Equity capitalization down to that level, and of course we've seen the all-share index down to 22,000 psychological line. We can't say if this is going to go lower than this, down to 16,000 where we saw it some years ago, or it's just going to hover between that level and 22,000 psychological line. If you look at the gainers chart, we had only two stocks that gained, and that will be Consolidated Hallmark Insurance, because again, this is a company that is doing its rights issue, involved in some primary market activities. Cornerstone Insurance did some 6%, and those are the two key stocks that gained for the greater part of last week. All other stocks, especially for the 64 orders, actually fell to the South Territory. And of course, that was led by Cadbury, which was down by more than 38%, followed by Zenith Bank, which was down by more than 36% as well. Then Axis Bank, and that's all the way down. Activity level, we saw some huge transaction last week for a value of just of 43.7 billion naira. That's really heavy in the market. And of course, total deals for the entire week was 26,054. Now, if you look at the major drivers of all of this decline, Zenith Bank also contributed massively to that again. Zenith Bank, this is a stock that was trading at 19 naira before the coronavirus fear and the weaker oil fears, hit the market. Now, for last week, it was actually trading at around 10 naira, between 10 naira and 11 naira. A lot of institutional and local investors actually took advantage of the low price and went deep on it. Guarantee Trust Bank, Stanbic IBTC, Dangote Cement, Seplat, and of course Nestle, all of these key stocks, major heavyweights in the market, were badly hit last week. And now quite a number of analysts are placing a heavy buy on these stocks. Now, if you look at the sectoral front, the banking sector was down by 26%, consumer goods was down by 14%, industrial goods was also down by 5.41%, insurance segment of the market down by 5.6%, and the oil and gas saw a loss of 8.51%. Let's do the energy stocks where there wasn't so much of change. Owando fell to as low as 2 naira, and that was a representation of 5.82% in terms of losses after we saw some 6.7 million units of shares traded off that particular counter. Seplat was down by 10% all the way down to 544 naira, which for now still looks good. And of course, we also know that the earnings for this particular company has just been released to the stock exchange this morning. So that's a particular stock that investors will continue to digest. Let's understand its movements for the greater part of last year this morning. Let's do the unlisted securities market. Folks are beginning to switch to the unlisted securities market. That will be the NASD OTC, as the NSI was up by some 2.14% last week. We saw the capitalization moving higher to 508 billion. We saw some 5.66 million units of shares traded for last week alone. We saw the value of that transaction put at 229 million naira, and we saw in total 53 deals on that side of the market. Investors are betting on the shares of CSCS, on Niger Delta Exploration Production, and of course a couple of other stocks like Friesland, Wamco, Campina, because again this is earnings season. Folks are looking to see if they will be able to get some earnings from these key active companies. Now, for the fixed income side of the market, bonds ended the week on a bearish note. Of course, we saw yields expanding by some 39 basis points. As you can see there, 29th of April or 26th of April, 2049, with the security that a lot of investors continue to give cold shoulder to. Now, for the NCB side of things, that also traded a bit bearish, of course. All the bullish sentiment that we've seen on this particular side of the market in recent time was wiped off last week. We saw market offers becoming too unattractive to local investors, in spite of the fact that the yield on that side of the market continued to expand. Last week alone, which expanded by some 49 basis points on the average. But the OMO side of things, the foreign portfolio investors continue to exit. Offshore investors remain the major drivers on that side of the market. But for the longer dated securities, they are not positive about that side, so they exit this long position in droves for the greater part of last week. We even saw some supplies, from the banking sector that is trying to push in the effects of the CRR debits. But again, that was just not enough to actually push the market further. So we got Adedayo Bakare here from AfriInvest, who's a research analyst with this investment bank. Thanks a great deal for joining us this morning, Adedayo Bakare. So let's put last week in retrospect. What was it like for you at AfriInvest?
It was, calamitous. It was a very bad week. And of course, this is expected, given, the events of the last 1 month or so. Initially, COVID-19 started very slow in late in 2019. Mm-hmm. Even China didn't know what to expect. And even up till, January, February, when they started containment, measures in China, the rest of the world was really yet to fully grasp, the challenge we are contending with. Over the past 2 weeks or thereabouts, as the virus has spread to advanced economies, I think it's in over 100 countries and territories globally now. We've come to a better understanding of the risks, the virus poses to the global economy, and that is why the reaction has been very, very bad. We're in a period of uncertainty, and investors are really not sure of how to navigate these kind of problems, because it's something that has not happened, for a while, at least over the past 2-3 decades. We've not seen a pandemic of this size. And, the effect on global economies where supply chains are disrupted, economic activities have more or less grounded to a halt in many Asian countries, especially China. Airline companies, are cutting down on routes. People are not traveling. Tourism is down. It's really a big challenge facing the global economy. And in Nigeria, although we've been able to contain, the few cases we have, we are not immune to the pressures in the global market, right? We have foreign investors, in Nigerian securities. And what we saw last week was that a lot of them had to exit because, again, it's unclear. Nobody really knows what to expect, how long it's going to take for the virus to, to slow, or, for the whole world to, contain the virus. So it's basically just investors reacting in fears and trying to take their money to safer havens.
Where's the safe haven? That's the question, actually. Because I asked the PFA last weekend, where is this particular safe haven?
US is supposed to be the safer haven. US is indeed the safer haven. And that is why you've seen that even the reaction of the US Fed, they are not leaving anything on the table. And that was why last week they reduced policy rates. Just on Sunday again, they had to cut it to 0%. And that is because they know they have to support the financial system. They need to support the US economy. And when you think in terms of the US equity market, the US bond markets, the kind of problems they've had over the past 1 week, then the US Fed has to support that market. And that is why investors will still find it attractive to go into the U.S. market because it's, in the U.S. and the Fed will support the U.S. Financial market and the U.S. economy. In Nigeria, for instance, it's unclear, right? Because most of the impact is through external transmission. External in the sense that oil prices is a major leading indicator for the economy, given how it drives reserves and how it drives government revenues as well. And we've seen that oil price fall to around $34 per barrel, which is the weakest we've seen in 4 years. What that means is government won't have enough money to spend on the economy. What that also means is people who rely on dollars for transactions might, have to struggle.
Mr. Emefiele will disagree with you that they don't have enough to spend. Last week alone, they issued a press statement saying that we actually have enough in our external reserves to defend to meet legitimate demands in terms of FX needs and all of that. And they warned the illegal or illegitimate speculators in the FX space to actually desist from hoarding the dollars and all of that. So it means we actually have enough in foreign external reserves.
Well, the CBN is allowed to, intervene in the markets and say, their role is to reassure investors really and businesses that, give them confidence about the economy. But when you think in terms of really the factors driving the global economy now, you see that no signs, we're not seeing positive signs essentially. In terms of, FPI inflows, as you said earlier, investors are selling off both in the OMO market and in the bonds market. When you think in terms of oil prices, it's down, not only due to the virus, but also the price war happening, between Saudi Arabia and Russia. And even if the virus slows, over the next few months, if it does, the challenges in the oil markets will remain because Russia and Saudi Arabia are keen on, boosting supply. And when demand is weak, then you expect that prices will be low for quite a period of time. So for us, we think, there are not good signs. In the interim, things might look a bit better, but really it's very, very hard for us to really know what to expect in the next 2 months. What we continue to track is the pace of transmissions, the transmission of COVID-19 across the rest of the world. I think that's the most important leading indicator for the world now.
So how long do you think it will take us to hit a respite? Because Italy has actually shut down for some days now, and we know that coronavirus actually has, I think, a gestation period of about 2 weeks, 14 days or thereabout. Now, US has also tried to do self-isolation and all of that, locking down themselves there. Now, do you think it is only going to take this period of 2 weeks, which is 14 days, or it's going to be 3 weeks before we then see some kind of a positive return to markets generally, Nigeria inclusive?
It's hard to say because the outlook on the markets is not really even driven by conventional factors. It's driven by public health crisis, and economists and financial analysts are not, public health experts, and that is why it's hard for us to say, oh, this is, the length of time it's going to take the world to contain this virus. China, we are starting to see maybe improvements in China, but we know that they started all the social distancing measures as far back as the end of January or thereabout. So that is why they've seen a reduction in the pace of infections. Going into Europe, Europe is the hotspot of the world. It's spreading really quite fast. So it's really hard to say, to to be honest. But with measures that seems to work in Asia, which is the social distancing measures,
which is what the US and co are trying
to adopt now. There's a feeling that we should see, a quicker. I mean, the spread of the virus should slow a bit, and normalcy should return. So for us, we think maybe in the second half of the year we should see return of
not even in the second quarter.
Well, in the second quarter, it's hard to say because we are almost at the end of the first quarter. And given the projections we're seeing for Europe, especially when you think in terms of Italy and what the challenges they're battling, when you go to the United Kingdom, which is trying to take a different approach to the rest of the world, and even if you go to US, to where they have public health challenges, tests have not been done, at quite the pace that you would expect. So it's really quite unclear when we're going to have respite. But we believe by the second half of the year, we should see economic activities return to previous.
Just before we move on to what should be expected of monetary policy committee and, of course, fiscal authorities, do you think the markets, the way they are right now, especially the equity markets, is a safe haven, given the level that we have seen these prices falling to at their rock bottoms at this point? Yes, I know that quite a number of investors have actually recorded losses. PFA, you guys as investment banking firms who've lost money because, for example, you invested on Zenith Bank at some 19 naira, hoping that it will, push up to some 20 naira, so you can gain a profit of 1 naira across the units that you bought. Unfortunately, it has hit 10 naira. Mm-hmm. Should we consider this market as a safe haven now for investors to come in?
It's not a safe haven because there's no guarantee that prices are not going to fall harder, But one of the things we think investors should look at is current valuations of stocks in the market are currently the poorest we've seen in quite some time. We know it's not driven by fundamentals, right? A lot of these companies are still, they're reporting good earnings. Companies like GT, like even Zenith, like even MTN in the ICT sector, which is the fastest growing sector.
In spite of the loss that they have, about 12% last week.
Fastest growing sector. In the Nigerian economy, earnings growth is in double digits. They pay good dividends. So for some investors that have, a bit of a longer term outlook, 1-2 years outlook, you could start to, position in some of these stocks with very strong fundamentals. Again, it's no guarantee that, prices are not going to fall.
So for those that have put in some 15 million naira in the second week of January, and now the value, if you do it, is around 2.5 million naira, just continue to stay long term, is it?
Well, it depends on their own outlook. If it's foreign investors that have a very, very short-term exposure to the Nigerian market, you see that they'll do whatever it takes to take their money out because you really don't know what will come after, especially as, all trends, when you think in terms of oil prices, foreign capital flows, point to the possibility of, an exchange rate devaluation where you could have FX illiquidity in the market. You might not be able to get out of the market. So it depends on really the outlook of the investor.
So the final note, by this time next week, we'll be seeing the CBN MPC meeting. What would be your expectation from this team?
For the CBN, they've almost exhausted all their policy arsenals. What we've seen over the past, quarter is that even before the rest of the world eased, the CBN are sort of eased in a way. Interest rates are down across all segments of the economy. Retail loans, consumer loans, and all sorts of loans are down. You see corporates going to issue commercial papers and bonds at very, very cheap rates. So I think it's really the fiscal policy that really needs to come to play to help Nigeria avert any form of disaster that might arise as a result of COVID-19. I think we need to see a response from the executive, the Ministry of Finance, to be specific now, in terms of the measures that will be taken to support the economy, to support people.
Some sort of a stimulus? Is that what you're referring to?
We need, because when you think in terms of...
Because we've seen some other banks in England...
If you're saying people should stay at home or should isolate themselves, then you need to think, what will people be eating? People who have part-time jobs, who will be able to earn monies. So in terms of fiscal policy, that is really something to think about.
All right, Adedayo Bakare, thanks a great deal for sharing your thoughts with us here. We really appreciate what you've, the insight you've actually shared with us this Monday. It's back to you now, Chimeze.
Thank you, Temple. All right, it's time we take a break, and when Business Morning returns, we look at commodity trading ecosystem as SEC organizes a conference on this. Do stay with us.